Welcome to the Rose Show podcast. Thank you, everyone, for joining us today. I have the utmost honor of being here with a true woman leader, Danielle DiMartino Booth. She is CEO fulfilling your mission of spreading financial literacy. I love your publications, The Daily Feather, The Weekly Quill, and Intelligence Briefing. Your book, here it is, Fed Up. It's so candid, straightforward, truthful, and very knowledgeable, funny, and intellectual. Should be required reading for all.
Hey.
I love it. It's just, I respect you for speaking out, and I love that you wrote it. Thank you so much. It's ever more relevant today, and it's just amazing. So you're a global thought leader, a true thinker in a world filled with groupthink and echo chambers. So yeah, and you are focused on monetary policy, economics, and finance, some of my favorite topics. So welcome. Thank you so much for being here. True honor. How are you today?
I'm doing great. How are you? And the pleasure's all mine.
Thank you so much. Doing great. Even better that we're meeting and we get to discuss economics and monetary policy from you. Okay, so instead of reiterating facts and explaining what happened recently, I'm sure you've answered those questions to ad nauseum, because there's always something happening anyways. Let's speak about ideas and propose solutions. As your book talks about, there's a disparity between Main Street and Wall Street. We had massive liquidity injections, money printing, zero rates, ZERP, as you refer to it in the book as well. You know, the negative yields ruined our economy. And a great quote from your book from Fisher, QE put beer goggles on investors by creating a line of sight where everything looks good. It's changed the perception of risk and outlawed saving. Can we ever recover from this massive QE addiction?
Well, I mean, that's a great, really kind of overarching theme right now, because we are watching the nation struggle with trying to extricate itself from this very addictive kind of policy. And you're seeing that there's a massive struggle. And, it's very disheartening from my perspective, because we should be a nation that can handle, if you will, positive interest rates. I mean, it sounds absolutely ridiculous when you consider that credit card rates, for example, are whatever they are, 21, 22%, the highest in the history of mankind. And yet for certain sectors of the economy, they've been able to borrow at the lowest rates in 5,000 years. And, when you strip away from consequences for taking risks, when you strip those consequences out, then there's going to be some poor decision making. And that's exactly what we've seen. That's why residential real estate, that's why housing's just gone crazy. Because starting in pretty much 2000, when Alan Greenspan, he left interest rates at artificially low levels and eventually trained U.S. households to view their home as an investment instead of as a place to live and put a roof over your head. And that mindset has yet to be distilled. In fact, after the pandemic, the Fed really doubled down on setting that very perverse mindset. And so, everything in a zero interest rate environment is perceived as being the equivalent, the adrenaline rush equivalent to going to Vegas. And that's just, it's not a healthy way to run an economy. And it also creates generations of, especially, your younger investors who think everything's just so easy. You just got to put money in the market and let it roll, put it on red and spin the wheel. So I think that this is the closest that we have come to trying to normalize interest rates. And I, for one, hope for my children and grandchildren one day, for their sake, that Powell succeeds, without, bringing the U.S. economy fully to its knees. The fact is, though, there's going to be consequences, and we're going to have to suffer through them.
Thank you so much for that. Could you elaborate on the type of consequences that you foresee that could potentially occur?
So, in the United States, 1 in 5 companies is what we call a zombie. And a zombie is exactly what it sounds like, Night of the Walking Dead. So these are companies that don't really generate sufficient cash flow to cover their interest expense, which is kind of hard to wrap your head around. But they can't cover their interest expense unless interest rates are at the zero bound so that they can constantly refinance their debt and stay in business. But, as you would think, my mother's a master gardener. She would tell me that you can't have a rose bush that's got a large dead portion of it. You have to prune that off. And in order for the rest of the rose bush to flourish, in that same sense, for the U.S. economy to outperform, you have to take poor operators with bad business models that don't have sufficient cash flow to cover their interest expense. You have to cull them out of the economy so you make room for innovation, entrepreneurs, new entrants, people who are not just going to subsist on low interest rates and not create new jobs and opportunities and generate at the margin economic output. That's where we need to get, in my opinion.
Absolutely, I agree. There's like a tightening of the belt that occurs, and being an entrepreneur since pre-2000, I recall 2008, it was survival of the fittest and who had the leanest books and records, difficult times. And, it's in a ways it's healthy, and it needs to occur in order to clean out the system of this perverse mindset. Like you said, things aren't easy, and I want my children to know they have to work, and it doesn't just come so easy. And the outlawing of the savings is very disconcerting. And you use that wording in your book. I agree completely. And I believe that this is what led the banks to be at this point, right now. They were forced to go and invest and put all that liquidity into sovereign bonds. And, it's the free money that led to where we are today. Do you think that the Fed is simply just too large to fight?
Well, if the Fed is forced into a position to once again take interest rates to an artificially low level, then I would actually say that the Fed itself is completely ineffectual. I would go the opposite direction in characterizing the Fed in such an environment. And if we are a country that can only subsist with repressed interest rates, we're no better than any banana republic. And, that's an environment in which you really don't even need the Fed. So, I have my mom is a baby boomer, and, we're pretty excited that she can get 5% on her money. For the first time in a generation, you can actually, teach my teenage kids what the idea of compound interest is, because, the Fed has finally gotten interest rates high enough that you can get that 5% in a money market fund. And so again, there's a lot of stones being cast, and Jay Powell, certainly the current Federal Reserve Chair, has certainly made his fair share of mistakes. By the same token, if I don't sit back and root him on to succeed, then I'm by definition saying, kids, you deserve to live in a world where you as a saver also never gets to enjoy the benefits of being frugal and disciplined in your approach to establishing your own eventual financial security, as opposed to what we have today, what a generation of kids, a lot of whom live with their parents as adults.
Exactly. We hope for the best, and we hope
Yes.
they proceed in that manner. We can't go back to the other situation that brought about where we are right now. So, I love your recent article, Too Small to Not Fail, regarding the small banks, which has the lowest insured deposit coverage ratios. You mentioned how the less liquidity they have, the more at risk their illiquid assets are. In your opinion, are they too small to not fail? Will we be seeing some of these small banks failing?
I sadly enough, I think we will see the small banks failing. I won't get into the nitty gritty, and I will say that DiMartino.substack.com, that Too Small to Not Fail is free for anybody to read in the public purview. So you can come and read it for yourself. And I go through the full chronology of kind of what got us here. But the bottom line is kind of a sad outgrowth of having money market fund rates north of 5%, as well as, oh, gee, I just saw the headlines. There was a bank run. I better take my money out of the bank and put it in a JP Morgan Chase, a Wells Fargo, a Bank of America, a Citi. That doesn't help the small bank that is the most vulnerable. And I think that it was pretty obvious that when Treasury Secretary Yellen was asked in front of Congress recently, from a congressman from Oklahoma, are you not concerned about the fabric of the U.S. economy being torn at and all these small banks going under? And she kind of pushed him off, shrugged him off, and basically intimated, we don't need all those small banks. Well, you know what we do? We're not the same as other countries. We're not China. Canada has 6 banks. We're the United States of America. And, there's a reason that we watch. It's a Wonderful Life and get a warm, fuzzy feel, because community banks dot the landscape and they know their borrowers. So, rather than come up with the next regulation that's going to make it easier for big banks to keep getting bigger, why don't we try instead and figure out how to keep small banks from going away? And so I hope that regulators can shift their focus, but I fear that because they're already of the mindset, namely because the lobbyists pay them a lot from these big banks, that they're already of the mindset that a lot of these smaller banks, potentially thousands of them, are just going to be victims of the moment. And that's a true tragedy, because you're not going to see, in fact, in any city in America, you're seeing these biggest banks close branches. So they're certainly not going to go to a small town and open up a branch that now no longer has a bank at all. So I welcome the phone call from Congress, and I will come and help them design a regulatory framework that tries to keep small community banks in business.
Thank you so much. Yes, unfortunately, it seems like we're moving into a banking oligopoly, where a lot of the small banks continue consolidating into the large ones, like say JP Morgan. Could you share with us some ideas, what you would propose to help that measure, to avoid that from occurring?
So I think that you would have to have, and I hate to use the word moratorium, and I don't want to imply that there's any kind of a bailout that we're talking about, but at least to provide smaller banks some kind of grace. If you're 10 billion or smaller in assets, that we're going to push pause because the Fed's come in with a wrecking ball and raised interest rates at the fastest pace since 1981, after committing to not do that. And yet they turned around and did exactly what these banks of all sizes had not been anticipating. So I would suggest that there would be some kind of a grace given to these small banks, and regulators can pretty much come in and do whatever they want. And you're not talking about massive losses here that you might be referencing the second and third largest banks to fail in U.S. history. Silicon Valley Bank, Signature Bank, these were massive banks that went under. I'm not talking about those great big, banks that are part of the top 25 largest banks in America. I'm talking about the smaller ones, and regulators would know how to go in and indemnify them for a period of time.
Great. Thank you so much. Great ideas as always. Danielle, do you believe this liquidity and interest rate risks could lead to credit risks?
So I think that that's your real issue, especially for smaller banks. And that's that they have such a high concentration of commercial real estate loans now. And it looks like the United States is finally going to be entering a pretty serious recession. So because we have, in the post-pandemic era, had so much money coming out of Washington, D.C. in the form of stimulus spending, the bank regulators were pretty comfortable with kind of looking the other way, wink, wink, nod, nod, extend and pretend. And so now you have a lot of overvalued commercial real estate loans on the books. And that's going to be very problematic. It's a 5 trillion or so pool of debt throughout all different kinds of the holders of this debt. And they estimate that there's $1 trillion of losses at least yet to be realized compared to where these loans are being held at book value at the banks. There's no way to prevent some victims from occurring, depending on how much risk they've taken. And a lot of banks have actually chosen to simply go out of business. I refer to it as bank euthanasia, and it's tragic. But Dodd-Frank was ill-conceived. It should not have been applied to the smallest banks. They should not have been required to bring compliance on as they were. Regulators finally figured it out, but it was 8 years into it. And by then they had made some fairly inappropriate loans trying to offset the added cost that Uncle Sam had laid upon them. So there are always unintended consequences. Mm-hmm. And we certainly have seen a fair share come out of the global financial crisis, which is why there's this constant criticism of regulators of always fighting the last war.
Absolutely. Thank you. It's unfortunate, but yes, it seems like there could be more consequences to come. You used the word recession, and I'd like to ask you your thoughts on a recession, and namely a earnings recession. In your book, you mentioned something which I agree completely with, how many companies are doing buybacks to jack up their earnings per share. And, that makes themselves look better. It seems that they're continuing that nowadays as well. Mm-hmm. Do you think that point is coming soon where the truth will be revealed and we will be in an earnings recession for a longer time?
I do, mainly because of the political divide that we have in Washington after the most recent midterm elections, which switched the hands of Congress from blue to red. And there's nothing political in what I'm saying. It's just we're not going to get more stimulus spending mm-hmm. that we had in the style that it was conceived after the pandemic hit. And that means that we will actually suffer a true recession. And how that manifests, it really remains to be seen, but we are indeed seeing, it's not just a Silicon Valley specific event. You're seeing people lose jobs throughout the different sectors of the economy right now. And that will be reflected in companies' earnings reports going forward. And it will be very interesting to see, especially the very beginning. I think the earnings season begins April the 14th or so, mm-hmm. the banking sector. It'll be interesting to see what the forward guidance is from these companies, because this banking crisis is so sudden, but we will be hearing about it from the people in the C-suites when they're on their earnings conference calls.
Absolutely, we will. Now, private capital is exponentially more dependent on ZIRP. Mm-hmm. Okay, and here we were discussing how, we anticipate and we hope the Fed continues their job in raising these interest rates. So we have two sides here. We have the earnings and the companies in corporate America, Wall Street wanting to go back to lower rates, while we have Main Street and, what we want for our children is to have some kind of savings rates, and for our parents. So we have two views there. What do you anticipate the future? How do you think this thing will play out with all that? And do you think this everything bubble that was created from all the free money will eventually burst?
So it's obvious that that there's a lot of behind closed doors, gnashing of the teeth. The last thing, private capital, private equity, the head of the largest private equity shop in America made $1.23 billion last year. That was his income. So there's obviously a lot of wealth to be protected, and they are seriously politically, embedded in Washington, D.C. So we will see if Jay Powell manages to not bow to the will of those with the most money. And if that is the case, then we will score a victory for Main Street, because we will start to see a little bit more balance in terms of the inequality divide that really has divided the country in many ways. It's not just economically that there is a divide in America, which I think anybody can see with, you know, with the naked eye. But if he succeeds, then I think we will finally send a message to those who've not had to play by the rules that, you know what, these apply to you as well. And you shouldn't be able to come in and lever up a company and then just, you know, just drive it into the ground after you've paid yourself handsomely hundreds of billions of dollars. So, you know, again, I'm forever rooting for the little guy and the little gal here. That's what I do. And I think rebalancing access and privilege, and not having privilege, the privilege of Fed policy only benefit the wealthiest. I think that's a really important step one.
Exactly right. Agree with you completely. Now, Danielle, let's put you in the shoes of Powell. What would you do? Could you share with us your ideas?
So it's going to be increasingly difficult for Jay Powell. It would be difficult for anybody in his position in a recession to not bend to the will, and there will be plenty of politicians saying, you are hurting our constituents, they are losing their job, you must take interest rates back down to the zero bound. And while that may provide very temporary relief to middle income earners, it will be immediately beneficial to those who make the most. So I am rooting that Powell succeeds in doing what I would do right now, and that would be to try and hold interest rates at a high enough level that you actually end up seeing write-downs of some very overinflated investments, and potentially even see law changes such that, you know, people in private equity had to actually pay the same taxes that the rest of us do, as opposed to being able to exploit this loophole and that loophole because they've got this senator or that senator in their back pocket. So I look to hopefully see Powell stand his ground and continue to maintain tight interest rates. I don't think he's going to keep hiking rates per se. I think you may get one more in the month of May. But even if he just sustains tight policy and continues to shrink the balance sheet, and then one day when it is time to lower interest rates, say, you know what, 2% is the new zero. I'm going to find a higher floor. 0% encourages speculation, and it only benefits a small cohort in society. And by the way, quantitative easing really didn't do much for the real economy. So we're just going to get out of that business. That's what I would do if I was Powell.
Perfect. Thank you so much. In your opinion, how long do you think this time period that we're in right now will last with the recession and all these difficulties? When do you think, if Powell continues with what he needs to do, when do you think we could probably expect some type of recovery where we can maybe have some real growth and in our economy?
So, I mean, that is crystal ball 101. I mean, boy, I wish I could answer that question. And it's so hard to say because there is so much excess leverage in the system that it's difficult to determine when all that gets wringed out. But you would have to think that with the unemployment rate still at 3.6%, that, you know, that we would at least get up to in the 4s to 5s. And I think something like that will take some time. I anticipate that we'll still be talking about the recession next year in 2024.
Yes.
I wish it wasn't the case. I really, really do. You know, but the average American, if they're making a car payment, it's close to $700. You know, 15% of all car loans that were underwritten in the fourth quarter of 2022, in 2022's last 3 months, 15% of them were for payments north of $1,000. So, you know, we've got an overextended government, we've got an overextended corporate sector, we've got an overextended commercial real estate sector, and we've got an overextended household sector. And these things do take time to unwind. And this is when you hope that communities and families come together and corral around one another for the hard times to come. And I've sadly enough heard that in certain food banks here and there that they've actually seen a doubling of the number of families, 200 to 450 in one city, just here in the last few months, as food stamp benefits have been reduced. For your average family is getting $250 less a month, as the emergency Medicaid benefits. But our politicians, they never had any business keeping these emergency measures applied for so long after the pandemic had already ended, and incentivizing people to stay out of the workforce, because you can never turn the switch off in that case. And there's absolutely no integrity in living off of the welfare state. You just end up being not an active member of society, but rather somebody who's subsisting, not existing.
Exactly. Well, you certainly are a champion for Main Street and the little people. And we should all come together, agree completely. And I also agree on your timeline. I think this will take time, and it may be 2025 before we really see some type of recovery. But, it's just, we have to work through the process. And so I agree with that. Thank you so much. I know it takes crystal ball 101, but thank you for just sharing your opinion. I want to ask you your work-life balance. I have to tell you, I respect you so much. You are an amazing writer. I loved your book and your publications. How do you balance that with family life? How do you have time? It's just amazing. You're Superwoman.
No, I'm not Superwoman. And, my children get used to asking me the same question 4 times because I'm trying really hard to write world's best paragraph. And they're saying, Mom, 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 Mom. It takes a tribe. It takes a village. And that is the story of my career. It is having a good family network. And, thank heavens my mother is and has been with me and able to help and support my travel schedule. And I also have great kids, and I've got a great husband. So, and I've got great friends. You add it all up, and it makes finding that balance conceivable. I've got 15-year-old twins. They're my babies.
Aww.
And years and years ago, the boy said to the girl, such and such's mom said it was a shame that my mom wasn't around very much. And he was I could tell he was a little confused. And my daughter, who was all of 10 years old at the time, said, Mom's doing important work. She's trying to help people.
Aww.
And, if I can convey that message to my own children and help incentivize them to grow up and do something that makes them happy, but also helps them help people, then I've done my work. My work is complete here. And that's the only thing we have to leave as a legacy to our children is financial independence in case we get run over by a truck tomorrow, is that you leave children independent on every level that you can possibly conceive, but especially financially. And there's an absolute epidemic of adult children living with their parents and parents supporting their kids well into adulthood. It doesn't bode well for their long-time happiness.
Exactly. Well, you are truly an example for your children and for everyone. And I am so honored to have spent a half hour of my time with you today, learning from you. Much respect. Danielle DiMartino Booth.
Well, thank you. And again, there is that Too Small to Not Fail. Just come to DiMartinoBooth.substack.com and read for yourself, and then share it. Share it with your children, share it with your grandchildren, share it with your neighbor. And it's not because I'm trying to toot my own horn. It's because I tore down the paywall to make the point of sharing something that I think is important, that all Americans need to read, so that we can come together and look for longer term prosperity, even if we know that in exchange for that, we're going to have some pain in the short term.
It's all about the truth and the reality. And I thank you so much for sharing that in such a funny way. You're very funny and you're very intellectual, and it's very entertaining and very informative. So I'm a subscriber, and I love the Daily Feather that comes in my inbox. They're really cool names, by the way, too. Daily Feather. I love that. The Quill. It's really great. Very creative. So check out Danielle DiMartino Booth, and thank you so much to everyone.
Thank you.